Welcome to another episode of Trade Like a Sniper, where I walk you through a top-down analysis approach on a higher time frame and frame a trade on a lower time frame, all using ICT's concepts and my own discoveries. So if you want to learn how to trade like this, just check out my profile for more videos or my contact information. So let's get started. As usual, if you're new, we'll be using TradingView's Replay tool on a higher time frame, and we'll just be picking a random pair. So I like forex pairs. There's less gaps. Let's see if there's anything new. Let me think of a currency. What's this really? IDL? IDR? Yeah, Indonesian rupiah. Okay, let's be really random. The rupiah against the Korean won. Yikes. Okay, maybe not. Maybe not. How about Hong Kong dollar against Taiwan dollar? Hey, all right. It's pretty nice. Okay. So scrunch it up. Scrunch it up. Good. Let's go to the 3-month time frame. Pick a random point of time. Okay. Let's see. Okay, so I like this area as a place to take a trade based on this time frame. So let's see if we come into here. All right. I'm going to go to the monthly and see what we got. Comes all the way back down. Okay, it's equal lows here, so this was the 3-month CB, right? So I don't forget. Lows here. Okay. Sell side. Took out this. Do we move lower or do we move higher? Let's go to the weekly. What do we see? Let's wait for weekly gap maybe. Okay, looks like it wants to take that out. But if we go higher, that'll be cool too. More opportunities. No gaps, just a whole lot of consolidation. Okay, let's just fast forward a bit. All right, so we go back to the 3-month, see what happened. Okay, let's go back to the weekly. Nice. We do have a gap here. Price came down. All right, so we have a weekly gap here. What I can do is okay, we got a gap here. It's being respected in this order block. Yeah, I want a weekly close below this gap. To take a short. If we do even close. Okay, I want to take this short. Here, where do we close here? Is that right? Here. So I like inversion gaps. We took out liquidity one more time. Now it's time to get opposing liquidity down here for sure. After you take this out, I'll be targeting this monthly gap here. Stop. I'm just gonna put it above the high. Because I'm not going to a lower time frame than this. So it should take out this low. Okay, it does take out that low. It comes into this gap here. Nice. Does it respect? It respects it once, twice, 3 times the lady. So we took out the sell side. Okay. All right, into the monthly gap. Okay, so weekly gap I'm interested in here. Let me see, when we come into there, we should do, well, not always, but okay, now maybe it's too long of a time frame. Stab out one more time, maybe. Yeah. Not yet. One more time for the money. Nope. One more time. Okay, now it's in that gap. All right, so okay, I'm not gonna trade like that. I trade only on the individual candles. So we saw it come into there. Let's see if it just comes lower. Yeah, okay. So look at that, came into that gap because it is in line with this structure. If it's just a gap like that, then, but this whole major structure is there. So you can see the time it takes. You get a block of time. It's blue. Get a block of time here, a block of time there. Okay, each candle is a week. So you get this whole structure. This structure is this whole structure down here. There's weeks and months that pass. Okay, so therefore weeks and months have to pass as well. You may think, oh, it's not coming back in here. It comes all the way down, but it does eventually, and then it makes another low. Okay, but you can do this on each individual candle. This candle here, I was trading this one into the gap, make another low. Overall, this gap is pretty huge, as in as many passes through. So I can expect at least to take out this low first. Then we can do a retracement to create a return to imbalance in efficiency, and then to take sell side liquidity on an overall structure. So you have your internal range liquidity and external range liquidity, which you can frame on just a single candle, and then you can do that same thing on a whole general structure, which can be many candles wide. Okay, so yeah, a little bit less than 1 hour. In this case, I'm not doing any refined entries, but imagine if you had this as your bias, you can take multiple, you can find multiple entries in there. Okay, so pretty straightforward. Let's have a look at what happened. It came a lot lower, right? So it came into this 3-month gap, remember? Internal range liquidity. What's down here? External range liquidity. Okay, so it doesn't matter what time frame you're framing it on. If you can align yourself like that, then it's pretty cool. All right, so that's it for this episode. Till next time, R2F signing out. Goodbye.